think it's all about the management. Honestly, that's where people fall short, and just maintaining that presence on site, making sure we're doing inspections on each unit at least once a year, just to keep an eye on things, and then still continuing to make little cosmetic upgrades as the years go on, because it's that deferred maintenance that gets people in trouble and the lack of management.
It is a common saying amongst real estate investors that you make money when you buy, not when you sell. While this catchy phrase has value, it fails to convey how easy it is to lose money through poor property management. Whether you self-manage or hire a professional, it is important to understand how to navigate the common pitfalls and challenges with rental properties without losing your shirt or your mind. That's why you have tuned in to Maximizing Your Property Value, the apartment owner's guide to operating rental properties as a successful business. I'm your host, John Stiles, real estate agent and team leader of the VIP Real Estate Group at Bridge Realty. As a current multifamily investor and former property manager myself, I understand the headaches and difficulties of keeping an investment property from becoming a money pit and time sucker. It takes a solid business plan. It takes tested systems, and it takes key team members to actually find success. So let's take a deep dive and maximize your property value. Welcome back, everybody, to another edition of Maximizing Your Property Value. This is the show where we dive into best practices, systems, and processes for managing your rental business. I am really pleased to have with me Daniel Krueger in the studio. And Daniel is with DGK Acquisitions, which is a local firm here in the Minneapolis-St. Paul metro. Daniel's focused on multifamily investing, and we're excited to have you here, Dan.
Thanks for having me. I'm excited.
Great. So could you tell us a little bit about your company? Actually, before we get there, why don't you start with how you got into real estate?
Sure. Well, I've been obsessed with investing in some way, shape, or form for most of my adult life. And I went to school at St. Thomas for finance. And like most people, younger people that are interested in that kind of thing, they're initially drawn to the idea of being a trader or something at some kind of investment bank or something like that. But after college, I ended up in the corporate finance space, basically internal reporting and analysis at various companies, managing budgets, building models and forecasting cash flows, and did a little bit with some acquisition analysis at one of my positions. So my background is pretty heavily in the analytics and managing budgets, which translates pretty well into the real estate game. And it was about 5 years into the corporate gig that I realized that the corporate space just wasn't for me. There wasn't enough growth potential. I wanted something that I could have full control over, as well as could scale up exponentially, and that's kind of tough to do in the corporate world. Even if you do really fantastic, you're still kind of limited by whatever the corporate structure is. So I was really drawn to the entrepreneurial aspects of real estate.
Yeah. So then what was like your first purchase into real estate?
The first deal I did was a 6-unit apartment building in St. Paul. And it was a pretty standard business plan with that. It's pretty much the business plan we've used on every property. We just find something that's been let go, has had a landlord that was either just burnt out or didn't know what they were doing. And there was a big disparity between the rents that were currently being charged and what the market would bear. So that was the opportunity there. Yeah. So basically fixed the units up, got a better tenant base in there, and did a refinance, pulled the equity out that we created, and rolled on to the next one.
Yep.
Pretty much rinse and repeat ever since.
That's really interesting that your first purchase was a 6-unit building. A lot of people start with like a single family or a duplex, something like that.
Yeah.
What was the difference in your situation?
The level of control that you get when you get above 5 units, then you start to then you're dealing with commercial financing as opposed to like a residential mortgage on a single family home. It's just a different process. It's a lot easier, I think, when you're dealing with commercial properties because they're looking at the income on the property and seeing if that'll support the debt, as opposed to looking at the borrower and what their personal income is. And then also the valuation. The properties are valued based on the income, and it's less dependent on comparables. So that kind of puts control into your hands. If you run the property well, then you can be confident that the value is going to go up, as opposed to just kind of waiting for the market to do its thing.
Yeah.
So.
Yep, that's the great thing about
Yeah,
large multifamily.
exactly.
Wonderful. So then take us briefly through the development of your company. Kind of where do you stand now? What is your focus in your company?
Right now, it's scaling up into bigger deals, and in order to do that effectively, you need to build systems and build a solid team. So that's the focus right now. And property management is paramount in that aspect. Having good systems internally for investor relations and all that good stuff is great. But if you don't have your property management fine-tuned and the tenant experience on the ground fine-tuned, then the assets just aren't going to perform. No matter how good your business plan is and how good you are at finding deals, if the property management isn't in place, then it's just not going to perform.
Yeah, we're definitely going to cover that here. So what is the kind of geographical area? Are you mostly in the Twin Cities here?
Yeah, it's all St. Paul so far, and I look at everything in the metro area. But for whatever reason, the deals that pencil out are always in St. Paul, and that's actually worked out nicely because we have a nice little neighborhood that we're concentrated in. So as far as efficiencies in management and maintenance, my maintenance guys and my manager aren't driving all over town between properties. Everything's pretty concentrated, so it makes it pretty easy logistically to manage and execute on our projects.
Yeah, very good. So talk to us about the property management side of things. Mm-hmm. You touched on that briefly here. So a lot of people go ahead and hire a third-party manager. There's lots to choose from in our metro area here. Mm-hmm. What have you decided to do in that space?
Well, when I first got the first deal, I think I was under the impression that a lot of people are when they're first getting started into real estate, is that it's going to be a passive endeavor. So on my very first property, I did have a property management company on day one for a couple of reasons. One, I had no idea how to manage properties because I'd never done it before. And two, I thought it was going to be a passive endeavor for me. And due to the level of work that had to be done in rehabbing the units and how much on-site presence was needed to execute that properly, it wasn't a good fit to have a third-party manager, or at least the one that I had. It's just things weren't getting done efficiently. So about 6 months into that project, I severed that relationship, and then I just took over to get things done in a timely manner. And so I got a good crash course there in the first year. I worked alongside the property management company for the first 6 months and learned a lot from them, and then came to the conclusion that they weren't fiscally incentivized to care enough to get it done, at least on a deal that small. I think when you get to bigger deals, it's definitely a good solution. But for a single 6-unit building like that, they weren't making enough money to care enough about it. And at the end of the day, no one was going to care about it more than me. So I figured it was best just to dive in and take it over for myself so that the project worked out, and it did. And it was a great learning experience. So, I think if anyone's getting into this, they should, even if they do hire a third-party manager, try to integrate themselves a decent amount just to understand what the process is so that when they're hiring future managers, they know what to look for and how to manage them.
Yep. Do you think your experience was because of the value add component in the large renovations, or would it have been different if it was already stabilized?
Yeah, if it was a turnkey deal, I think that would have been a good solution. They would have just been, collecting rents, stopping by the property maybe once a week to make sure things are looking good. But due to the level of rehab that needed to be done, it needed boots on the ground every day to make sure things were getting taken down. And that, had I been more experienced on that first day, I would have known that going into it. But, just got into it and learned the hard way. And it was a good crash course and learned a lot. But after that, I kind of zeroed in on the importance to me in having that level of control in these projects. So I decided to stay vertically integrated with my property management instead of hiring out to third parties to just build a team in-house so that I could still have that control, yet still be able to take a step back and know that the person managing the assets is my employee, and they're pretty much just as incentivized as I am to do it correctly, and they don't have other properties for other people that they're managing that are going to distract them.
Yeah. One of your comments just now made me think of something. So you said stop by once a week. Mm-hmm. A lot of managers I've talked to stop by their properties once a year, once a quarter, maybe.
Yeah.
How often do you recommend we stop by our rental properties?
Well, for our projects that we're working on now, it's almost every day. Maybe not the weekends.
But those are specifically for value add projects?
Yeah. So there's
Okay.
there's rehab projects going on, and there's usually a need for a visit for one reason or another. But I think at least once a week,
Sure.
to be honest.
What about stabilized properties? How often do you recommend stopping by those?
Well, I guess it kind of depends. If it's a single family home, that's a different story. There's less things that are going to happen with one tenant. But if you have a 6 or 10 unit, then there's 6 or 10 potential things that could be going on. The more people you have, the more potential little issues there are, even if it's just general cleanup around the property. But I personally err on the side of having a greater presence because we're invested in the C-class assets. And I think those assets typically don't get the best customer service. So if you provide that, then you're going to have much better tenant retention, and you're going to start to get referrals. And I think it just leads to a better customer experience, which leads to better occupancy and better performance in the asset.
So I guess one takeaway from this little discussion is just whichever property you're buying, consider the proximity of yourself or your manager, so that you can have that high presence level, especially in the lower classes where, probably in any class, where, like you just said, when tenants see you there, they're going to recognize that you care.
Yeah, and I think a lot of tenants, they don't really, they shy away from communicating issues, whether it's maybe the trash company didn't pick up the trash one week. Everyone's kind of expecting someone else to call and let someone know, or there's just some rubbish around the property. Everyone's probably thinking that someone else will make the call, or even if there's a repair that needs to happen in a unit. A lot of times tenants don't really want to bother the management, and they might see it as a negative. But if there's a presence on site on a regular basis, we can catch that stuff that people are either waiting for someone else to call in about, or just kind of kicking the can down the road on and not calling about. So it lets us be more proactive with keeping things running properly.
Yep, very important. So talk to us about growing your in-house management team. Maybe talk to us about your first hire.
Yeah, well, the first hire was actually more of an acquisition. I had a live-in caretaker in the second building I acquired, who turned into basically my leasing agent for the most part, and then also did other property management duties like site visits and helped route maintenance calls and things to me. So that was the first hire, so to speak. He was an older gentleman that had been in the building for I think 10 or 11 years, and so he was great. He was really in touch with the market. He knew the tenants, he knew the tenant base, and so when he was showing units, he was very relatable, and he was also just a great sales guy. And he was old enough; he had a ton of experience in sales. He could show a unit better than I could, and I think he just related to the tenant base better than I would. So he was fantastic. And then, unfortunately, like I said, he was older. There were some health issues, and he ended up passing. So after that, that's when I went to the market to try to actually hire someone after that. The first actual hire after that was not a good one. That one took about a month to realize that the first hire was a bad fit, and it basically just came down to poor communication. She wasn't communicating with the tenants properly. She wasn't communicating with me properly. Projects weren't getting done. So after about a month there, we realized that wasn't a good fit. Moved on. And then since then, we've gotten another manager on board who's also a realtor. So that has an additional value add there when we're looking at new deals to underwrite. He's going to be able to bring a lot of value to the table and help us assess neighborhoods and things like that. And then we also have a part-time property manager as well, who has a full-time corporate job, but is really interested in investing in real estate and wants a little bit of extra income coming in, so he helps cover the nights and the weekends. So it's a good little team we got so far. So I think we can get up to about 100 units or so before we need to bring somebody else on board. So how I'm anticipating scaling it is about one manager for every 100 units. That seems to be, based on people I've talked to, that seems to be a good mix.
Yep, that sounds about right. What was your experience with, or sounds like it was a positive one, but talk to me just about the idea of having a tenant be kind of employed versus an outside person? Is there any dynamics there to be considered?
Yeah, I mean, it is nice to have somebody on site, especially at these buildings that don't have the scale to support an on-site manager officially. If you're looking at deals that are 100, 200, 300 units, you're going to have dedicated staff on site with an office there, and you've got boots on the ground, Monday through Friday, 8 to 5. However, if you don't have that kind of scale, I think there still is a lot of value in having at least a caretaker, even if they're not really a manager, just to kind of keep an eye on upkeep of the common areas. They can help out with throwing salt down when there's snow, and you have your dedicated snow removal guys and lawn care guys, but they can help with those little things in the interim, as well as just be your eyes and ears for anything that's going on the property. Because that's valuable. Even if you have a property manager who's making site visits every week, the stuff that happens at 3 a.m, they're not going to see. But a living caretaker who might get a little discount on rent or something is going to be able to pick up the phone and say, okay, unit number 7 is having a few parties. So it gives us an extra level of insight into how the property's actually running.
Yep. That little detail about putting out salt is really important because oftentimes whatever snow removal company you might use, they go out after a 1 inch or 2 inches, depending on your contract.
Yeah.
But that 1 inch needs to be cleared still, and ice builds up, and so.
Yeah, that little stuff is valuable. So that's really where you either need someone who's, who you employ that's up at 4 a.m. to start doing that, or the best thing in my opinion is just to have someone on site. And they get a little discount to run out there in the morning, shovel the walkway, maybe just a couple feet, throw some salt down, and that makes a big difference for the residents.
Yep. Well, you talked earlier about your business plan is buying kind of distressed properties or properties that have been neglected and then turning them around.
Yeah.
Can you touch on a little bit about the process of maybe how you decide which things should be done for the best return on that investment type of thing? Yeah,
I think you're going to get the most bang for your buck in the unit upgrades as well as the common area upgrades. So initially when we're looking at a project, the first step is during the physical inspection, during the due diligence. I'm walking through every unit with my engineer. He's looking for structural issues, plumbing, electrical, all that good stuff that you need to worry about. And then I'm in there looking for what kind of aesthetic upgrades can we make to increase the rents. And then the same goes for the common area. So nailing that down during due diligence is going to be important, trying to figure out, where are the value add opportunities, how big is the gap between the current rents and the market rents, and, what can we upgrade to get some better rents? Because there's a lot of things you can spend money on that won't necessarily get you a higher rent. Adding a ceiling fan or something like that. It's, it looks nice, but is it going to get better rent? I think money's better spent on, upgrading the flooring, the appliances, the bathroom. That's the stuff where the tenants actually see value. So, basically I take an ROI approach to it. I always look at each expenditure and say, how much is it going to cost and what's the theoretical boost in the rent, if anything, that we're going to get. Mm-hmm.
Yeah, with ceiling fans, that's actually more things that can go wrong.
Yeah, that's a liability. You could have a kid hanging from it. You could have all sorts of things going on. So that's one of those things where, people put them in there, but they don't really realize that they're probably not going to get money back for it. And there's, an added liability too. Anything that you can kind of trip on or hang from or anything like that could actually be an issue. So yeah, it's worth being aware of. So what has been the best way to efficiently implement your value add plan? During the due diligence process, while we're doing the walkthroughs and all the units, I'm also taking notes on my initial perception of the tenants. And so if we can identify if there are any tenants that have been causing issues in the property, and they're not on a 12-month lease, that could be an opportunity to identify which units we want to prioritize. So if we see someone who's not paying their rent on time, usually takes a month or two to determine that. But if we see someone who's just disrespecting the unit, or we see signs of any kind of illegal activity, those are usually units that we're going to prioritize coming into an acquisition. And then on the flip side of that, we look for who are the good tenants that even if their rent is under market, we want to identify those good tenants who have been there for a long time, they're paying consistently, and make sure that they stay at the property and still make some upgrades to their units, whether it be appliances, or painting, something like that. So they get a little bit of a value add and then delay bumping the rent on those people. So basically identifying the bad eggs, prioritizing those, identifying the good tenants, making sure you're making them happy, and then the rest of the units that just turn naturally, just kind of knock out the renovations as those happen.
Sure. Yep. And are you using a lot of outside third-party vendors to do this work, or do you have employees for maintenance as well?
Yeah, we've got a maintenance guy in-house who handles the bulk of the work that we do, and then he has subcontractors that he pulls in as needed depending on the volume that we're doing. So we try to utilize stuff in-house as much as we can just to reduce the cost. And that brings the cost of our projects down dramatically over outsourcing. We do still have to outsource some stuff, electrical work, we'll outsource that. Some more extreme plumbing issues we'll have to outsource. Any large CapEx items, like if there were a roof or something like that, we would usually still outsource. But for the most part, if we're going to go in and improve, appliances, flooring, paint, fixtures, redo some tile in the bathroom, that's all stuff that we can do in-house, and that helps keep the cost down quite a bit.
Yeah. So then what is your typical expected hold time on these properties? Are you kind of a buy and hold for forever, or you got a good 5 to 7 year turnaround expectancy? Or?
Yeah, well, that's kind of evolved as the business has evolved. So early on, I was just buying properties on my own, and so my game plan with those was just to basically hold them forever, and refinance every few years as the debt gets paid down to keep the leverage ratio profitable. Because obviously, as you build up equity in a property, that return on equity starts to kind of drop off. If you get down to 60 or 50% leverage, that extra equity there could be used for other deals. So my plan with some of those older properties was just to keep holding them, refi every few years to pull a little bit of equity out and redeploy somewhere else. But on the most recent deal that we're working on now, it's structured as a syndication where it's 80% of the funds are coming in from investors, and then 20% is my money. So most investors do want to see an end date. So they do want to see a date where, okay, this is where we exit, we get everything back, and we're done with this project. So the deal we're working on right now has a 5-year anticipated hold on it. And I think that's, depending on the projects that we look at in the future, we might go up to 7, depending on what the market looks like and how big the project is. But I think 3 to 5 is usually ideal, just from a marketing perspective to investors. That's something that people could look at, get their head wrapped around, and feel comfortable in. But that also changes depending on your investors. If you're working with people who have money in an IRA account, they're not going to touch that money until they're 60 anyways, so they might care less. People who are investing their cash are usually a little bit more eager to get in, make their money, and move on to the next deal.
Yep. Hey everybody, I'm interrupting the show quick because I wanted to invite you to a special event that I'm hosting at the end of 2019. The end of the year, during the holidays, is a great time to be getting together with friends and family, making new memories, and even new traditions. One new tradition that my family started a few years ago is volunteering at Feed My Starving Children. If you haven't heard of this organization, you should definitely check out their website. It's fmsc.org. Basically, they utilize volunteers to pack nutritious meals, and then they send those meals overseas to different areas of the world that have a significant need for food. These meals have made a huge impact in thousands of people's lives. And I really like volunteering with Feed My Starving Children for 2 main reasons. Number 1, it gives you a tangible way to give back. It's not just giving money, which of course is important, but it allows you to use your time and your energy alongside of other people in a common cause. And number 2, it fosters discussion of how we can live our lives serving others and not just be focused on ourselves. And since this is a family-friendly event, it allows us to live out this mindset right along with our children. So would you consider joining me? I've reserved 50 spots, and this is room for you, a friend, a loved one, to join with us and help out the cause. It would be really amazing to see you there. The date, time, and location is in the show notes. There's also a link that allows you to sign up and let us know that you're going to be there. And you can share that link with other people that you think might be interested. So thanks so much for considering it. Now, let's get back to the show. So I want to talk about kind of the management process after the value add has been completed. Mm-hmm. Because as you know, a a lot of these properties that are owned by individual owners and whatnot, they become your value add opportunity. And so how do you prevent your own properties from becoming distressed?
I think it's all about the management. Honestly, that's where people fall short, and just maintaining that presence on site, making sure we're doing inspections on each unit at least once a year, just to keep an eye on things, and then still continuing to make little cosmetic upgrades as the years go on, because it's that deferred maintenance that gets people in trouble, and the lack of management. Basically, the property we're working on now, that we're working on closing here before December, is one where the owners have owned it for 20 years, and they've just gotten distracted with other properties in, I think, the North Metro. And so it's just not convenient for them to get out there and manage it anymore. And that's the reason that it's an opportunity for us, is just because they haven't prioritized taking care of it, and they'd rather just let the rents stay low, hope people don't complain about all the issues, and then it becomes an opportunity for somebody else. But, all it takes is communication with the tenants, some consistent on-site presence, and you should be good. So
Yeah. So they've taken their eye off the ball there,
yeah,
huh?
pretty much. Or in some cases, they never had it on in the first place.
Yep.
So,
well, a lot of people have other businesses that they're working, and real estate's just the side thing. And if nobody's assigned to pay attention to it, then
yeah. And I think like me on my first deal, I think a lot of people get into it expecting it to be passive, because it's marketed that way in a lot of books and a lot of programs out there. It's pitched as passive income, which it can be if you partner with someone who's built a business around it. Then it's passive. Or if you're investing in triple net properties like a CVS or something, that's pretty passive. But it's pretty tough to pick up some apartments or even single family homes on the side and treat them in a passive manner and expect them to actually perform well. Someone's got to be running it like a business, whether it's you or a third-party manager, or you're partnering with somebody who's structured a business around it. Someone's got to have business systems in place for that asset to actually perform.
Yep. Well, you've talked a lot about the communication with the tenants. I know when you get several units, it can be kind of overwhelming to just prioritize and remember all the different situations that are going on. Mm-hmm. So what maybe system or tool or software have you put in place to make sure things don't get forgotten?
I'm a spreadsheet guy personally, so I like to track our rent roll and any notes on tenant communications in there. We've recently switched over to using Buildium as well, which is a great tool, which we need to leverage more, because that's going to be a great place for tenants to submit maintenance requests, also for our team to assign tasks to each other in there internally and have one central hub that everyone can go into and see what needs to be done and see what kind of outstanding issues there are. And so it's a great tool that we're working on utilizing more. But it is a slower implementation process with that, because you do have to train the tenant base to use it. And a lot of these people have been, under a certain owner for 10 years, and it's always just been this, casual situation of, collecting rents in person and maybe a letter going out here and there. So getting people switched over to a newer system usually takes some time and some training, especially if they're in an older demographic. They might not be as excited to jump on board with an online platform like that. But yeah, I think it's going to be a huge value add as we continue to train the tenant base and get people switched over to that.
Yeah, those new software tools, where they're not really all new, but new to some people, those are really valuable.
Yeah.
But getting tenants to adopt them can be a big challenge.
Yeah.
Any success stories of people that you've converted?
Something we're working on now is creating an incentive to at least pay online. It could be, just a $5 or $10 discount on rent or something like that. That seems to have some traction so far. But otherwise, it's just consistency with the message, and having my manager or whoever you're utilizing make sure there's a consistent message to the tenants that this is the way that we're going to be doing things going forward. But I think offering some kind of incentive above just the reminders is a good tool as well. So people are going to save a couple of bucks. That usually gets people to take action.
Yep, for sure. Even that $5 can go a long way.
Yeah. So it's worth it.
Did you review several management softwares before you landed on Buildium, or what made that decision for you?
Not really. I mean, it was basically, I used a software called Tenant Cloud that I signed up for when I got my first property. Wasn't too excited about that. There really was no customer service to it. And it was useful for collecting payments online, but outside of that, it wasn't a very user-friendly system, at least as far as I was concerned. And then I did some research online and basically came down to Buildium and Appfolio. And while interviewing property managers, I came across Yardi as well. But the ones I kept hearing about, talking to people in this space, in the multifamily space and syndicators, was Buildium and Appfolio. And I believe Appfolio has a minimum number of units. I want to say it's 100, something in there. A little bit higher price point, but it almost always seems to make sense at a certain point if you have enough units. So making the jump to that one is going to be inevitable, in my opinion. So Buildium seemed to make sense for under 100 units. You still get some robust features there, and the price point was pretty good. I can't remember off the top of my head what it was per month, but it wasn't a big outlay of cash. So it was definitely worth it if you utilize it to its fullest. And then I think once you get into more units, Appfolio seems to be the winner from most people I've spoken with.
Yep. Wonderful. So have you been the main property manager then within your company, or do you have other sub-managers kind of dealing with different properties?
The way I structure right now is my full-time property manager is the main manager. And I am, as far as the residents are concerned, I try to keep myself fairly removed just so that there's consistency in who's getting contacted. If we have one point person and one guy who's the manager, so to speak, I think it makes it a lot easier. You don't have communication coming into three different people. And so that's been a little bit of a learning curve for tenants with the turnover we've had and the fact that my maintenance guy is usually taking requests as he's on site working on stuff, getting people to just funnel all their communication through one individual. It's been challenging, but we're working on it. So right now the way I have it structured is my full-time manager is the manager, and I try to make myself more so the asset manager, making sure that I assign budgets to projects and approve certain expenditures over a certain amount, but I try to let him pretty much do his thing because he has a lot of experience and he knows a heck of a lot more about property management than I do. So that's kind of the goal is to hire people that excel in the areas where I'm not the best. So yeah. I'm a good underwriter, I'm a good asset manager, I'm good at finding deals. But as far as property management, I had my 12 months of experience there when I got started, but he's coming to the table with several years of experience as well as real estate agent background. So
yeah, that's great. So as from an asset manager perspective, how do you look at managing your manager? Kind of what routines do you put in place? How frequently do you meet with him, or that type of stuff?
We do weekly meetings officially, and then there's communication pretty much every day with all the projects that we've got going on right now. So I try to, and this is a tough one for me, try to let him take ownership over the role because I tend to be a micromanager if I'm not careful because I'm a little bit of a control freak. And when you're trying to take that approach and less about the job than the person you're trying to micromanage, that's not a good mix. So, it's been really helpful for me to utilize mentors in that aspect and get that confirmation that yes, you do need to, trust someone to do this for you, even if you think you can do it better. You've got to let them do their job, and even if they fail, you got to let them do that to actually have a good relationship with the employees. Because if you are in there meddling with things, then that's just not a scalable business model. You'll never be able to scale up if you're always the one who's got to review every little thing that happens. So
yep, for sure.
It's been tough, but we're working on it.
That's a lesson that a lot of us need to learn. Mm-hmm. Entrepreneurs, we'd like to have our hands into everything and make sure it gets done right.
Mm-hmm. Yeah, I've read a few books that speak on that topic. So, E-Myth is a good one. I'm sure you've probably read that. But, the message is consistent across the board. Pretty much every book, every expert in the field, you got to step back and let other people do their thing. Otherwise, you're just not going to scale. So,
yep. Great. Well, Right now, I want to bring in a question from our audience, and so I'm just going to pull it up here on the computer.
Hey Styles, this is Justin Hennig also with Bridge Realty and with Lyndhurst Holdings. We're a buy and hold company in South Minneapolis, working on building a portfolio and also redeveloping some property. I have a question related to RUBS, or Ratio Utility Billing Systems, I believe it stands for. I've seen other landlords implement that to reduce their expenses and increase their profits overall by defraying the cost of water, sewer, garbage, and I've even seen it used for gas. Typically, electrical is always separate. So anyways, would love to hear what you got to say about that and how we can improve our businesses. Thanks, Styles. We appreciate what you're doing.
Okay, so you had experience with the RUBS idea?
Yeah, we're working on that now. The first thing that we prioritize in all of our projects is always going to be those unit upgrades to get the increased rent. But a RUBS program is also kind of low-hanging fruit, usually because there's little to no capital expenditure required, and it's an instant boost to your NOI as long as you don't scare off your tenants by throwing up by increasing your rents and then simultaneously adding a whole other bill to the equation. So we usually try to leg into these things and prioritize the unit upgrades first. But we're using Guardian as our RUBS provider, and they've got a few different ways of implementing that depending on the number of units you have. If you've got larger properties, 150, 200 units, it might be more advantageous to install hardware on site that actually measures each unit's actual use of water, if you're going that route. In my conversations with them, it seems to be much more... it seems to make much more economic sense to use the RUB system, which is Ratio Utility Billing, where they don't necessarily install hardware, but they use a formula to back into what each unit's portion of the water bill will be. And they can either do square footage or number of occupants. Seems like it's 6 one way, half a dozen the other, depending on how many units you have. And if you have all the square footage data, that might be the deal breaker there. If you don't have that data, that might rule that one out. But in any case, they'll use that data and they will retroactively bill the tenants for previous usage. So you would scan in your bills that you receive for the month of November, for example. They'd get that. They'd send out the bills to the tenants, and they give you the option of either the tenants paying you or the tenants paying Guardian, and then Guardian sends the money over to you via direct deposit. And the cost of that's fairly low. I want to say it's about $7 per unit if they do the billing and the collections, and about $4 or $5 if the tenant pays you. And I think the way that most people do it is they have that billing fee, or whatever you want to call it, factored into the bill that goes to the tenant. So that could be zero cost to you. The only thing you'd want to consider is whether or not your market's going to bear it, if there's other properties that are doing it, and if it's going to increase your vacancy. Is it worth it to get an extra $30-$40 a month if someone gets that bill and gets turned off and leaves? So you want to make sure it makes sense. You want to make sure that the market will bear it, and that you're not going to be throwing too many expenses at your tenants at one time. Yeah.
Do we have to use a third-party company like Guardian, or is this something you can do in-house?
You could do it in-house. There's nothing, to my knowledge, there's nothing legally that prevents you from doing that in-house. But there is a pretty big administrative demand to doing that. They're going to create the bills for you, mail them out with pre-addressed return envelopes for the payments, and they do that entirely. And if you're able to pass that cost on, or at least some of it, to the tenant, that's usually better, because I don't know, for most investors, I don't think the highest and best use of their time is sitting there creating invoices and mailing them out and waiting for the payments to come back and all that good stuff. So I don't think the ROI on your time is there if it costs you a couple bucks to have somebody else do it versus you spending hours doing it every month. I think that probably wouldn't be the best use of your time, but you could. I don't think there's anything stopping you. You just have to have an addendum in your lease and have your lawyer write it up based on where you're located, and just be transparent about the method you're using, whether it's the number of occupants or the square footage. And if you get that addendum in there and they sign it, then you can basically do the billing however you want. from what I understand. But for me, it was kind of a no-brainer to outsource for the low capital cost of using Guardian. And they have a 12-year agreement that they want you to sign, but there's no there's no upfront charge to start. They just want you to stick around for a year if you do it. So
12 month or 12 years?
Oh, I'm sorry, 12 months.
Okay, I was like, wow.
Yeah, that's a lot of commitment. Yeah, 12 months. I'm sorry.
Okay.
So, I mean, there's not a big downside risk to doing it. With a lot of these types of services, you're going to find that there's this big upfront charge if you want to start using some sort of platform and then a monthly deal. With this, it's, you can pass the costs on for the most part, and there's no real, reoccurring cost or anything that you need to worry about.
Yeah.
So you just want to be smart with the types of increases that you're passing on to your tenants, and pick the ones that are going to be providing the most value to the tenant first, because that's going to be the most likely that people are actually going to be willing to pay up for. People are going to want to pay for newer things. They're probably going to be less excited to get a water bill. But on the other side of the coin, they're also probably going to be more cautious with their water usage too. So
yep,
kind of helps everybody.
That's definitely one of the benefits there.
Mm-hmm.
Have you found, or what's your opinion, is the marketplace willing to pay for their water?
Yeah, I think water is a pretty safe one. I haven't experimented with, I forgot what else you mentioned, gas, electric. I mean, theoretically, you could do trash. I mean, you could bill back for all the utilities and all those things if you want. But I think that's kind of pushing it, just because I haven't really seen many other communities do all of those things. It's usually water. But yeah, I've lived at an apartment that did this, and I wasn't even really aware of it at the time. This was back 4 or 5 years ago when I first moved in with my wife. We were still just dating, and I was always a little confused as to why the rent. It was all an online system, and the rent would always change a little bit each month. I never really understood why. And then years later, I've gotten into all this now and look back and I'm like, oh, okay, they were doing a RUB system. The water usage was a little different each month. Mm-hmm. So, I think there might be a lot of people that depending on how you bill it, might not even really be aware that it's there. So if you're using, AppFolio or one of those types of things where it's just a line item on the bill that they go online and pay every month, they might not even really notice that it's there. So
yeah, well, that always points out something that we need to increase communication about it, because part of the idea is that it would reduce usage, mm-hmm. and that's only going to happen if they realize they're paying for it.
Yeah. With me, I didn't. They had really good systems at that place. Everything was online, and it was really easy to just go on, click pay, and you didn't really look at the breakdown of anything. I was younger, so I didn't really pay all that much attention. But yeah, if your goal is to actually reduce the water usage, you do want to make sure that everyone knows that they've got some skin in the game.
Yeah, for sure. Well, I want to talk to our audience just briefly and mention thanks to Justin for submitting that question. And if anybody else has just a thought or a question about management and would like some input, we'd love to get your question. There's going to be some instructions in the show notes for how to submit your question. And it's just a great way to have a little conversation be a little bit more dynamic. So be sure to check that out. Okay, so I want to ask you kind of what's been the most challenging thing about being in the rental business?
I'd say the most challenging thing is trying to build a team of employees. I came into it having a pretty decent understanding of what to expect from, finding large maintenance issues in properties. That was kind of something, I expected. Having weird, tenant situations. That's something that you hear about and you're kind of prepared for. But the unforeseen one that I didn't really anticipate was the interpersonal things that can happen when you're hiring multiple people and having people work together for you. That whole HR component wasn't really on my radar at first. So that's been challenging for me because in the past, I haven't really been in leadership roles in any of my positions where I'm managing people and having to deal with that kind of stuff. So that's been a new thing for me. So.
Yeah, you're right. A lot of people don't think about the employees or the contractors that you need to work with.
Yeah.
And that's a huge part of it. I mean, that's the whole thing. When you're going to really grow a business, you need people in the business, mm-hmm. right? So Any tips or strategies you've learned and been able to implement to kind of make that process go smoother?
Yeah, I think now that I've got a few hires under my belt, something that I've learned is to not just focus on the hard and technical skills when you're interviewing somebody, but to also focus on their philosophies and morals and make sure that they're aligned with you. Because it doesn't really matter if they're really great technically at the job. If they have some sort of misalignment with you philosophically, that might not be obvious right off the bat, but 3-6 months down the road, it might become clear that they just are on a different page in some respect. So they might have different goals. They might be the type who wants to help you drive revenue and increase the value of your asset, but they're doing it in a way that's taking shortcuts or not treating people properly. That might not be something you pick up in an interview, but 6 months down the road you might realize that, okay, this guy's kind of cutting some corners here that might save us a few bucks in the short term, but is just they're not morally on the same page. So it's tough to do, but trying to assess where someone is morally relative to you on day one is valuable. It's tough to do, but
yeah. So I'm just going to add in a question there. Are you a moral person?
I am. But there's a lot of people out there that aren't. So you've got to be careful. You got to make sure that people they're not just saying what they think you want to hear in an interview, but they actually are on the same page with you morally. We're not in this business to just make as much money as possible. We're actually trying to provide a quality living experience for an asset class and a demographic that traditionally hasn't had the best customer service. Usually the properties that we're getting, owners typically do the bare minimum to not lose money, and that's about it. They're just trying to keep the car on the road. They're not really trying to provide a really great customer experience. So that's our focus, and that's what I think is going to help us grow, because that'll kind of differentiate us from the competition out there.
Yep. So on the other side of that question, what's been the biggest benefit of being a landlord?
The level of control you have over your asset, I guess, if that's your question. If you're asking about benefit to being a landlord versus just being, someone who owns assets and outsources the management, I think the level of control I have, keeping everything in-house, has been the biggest benefit. Helps me keep costs down, and it helps me psychologically just know that I'm able to take ownership over the performance of these assets, and I'm not really comfortable leaving that in someone else's hands. If something goes south, I don't want to ever be able to say, oh, it's that person's fault. I'd rather take complete ownership over it personally.
Yeah. I suppose that's also the benefit of being in the multifamily asset class as opposed to just stocks or whatever else.
Yeah,
you can control the outcomes of it.
Yeah. I'm fine failing if I did everything I could to make it happen, and I failed. I'm fine with that. But if I get into some other kind of venture where I'm relying on other people to perform for me and they don't, I'm just not that comfortable with that. I'm the type of guy that just wants to take responsibility. So
yeah, very good. Well, one other question I have as far as systems and processes is when it comes to expenses at your property, because we know that that's one area we can try to have control over, but yet it seems that there's always something to be repaired, or there's always a contractor that's charging too much. There's so many different things. How have you been able to keep your expenses under control, or what systems have you put into place for that?
Well, keeping a lot in-house definitely helps quite a bit. And something that we're also taking a more proactive approach with my current manager, and this is something he brought to the table, is to periodically get bids from vendors that you might already have covered. Technically. So it might be trash service, it might be if you're leasing laundry equipment or something like that. These are just examples, but basically keeping all your vendors honest and getting bids from competitors just to see if there's some savings out there. And 9 times out of 10, if there are, you go back to your current vendor for whatever it is and say, hey, this guy on the other side of town is going to do it for X amount of dollars. Would you be able to match that? And 9 times out of 10, they will. So taking a proactive approach to just checking the market rate on different things that you're getting serviced, I think is a good idea.
Yeah, that's huge. Because otherwise you get comfortable. And I think the vendors typically see that and they're like, oh, I can increase a little bit here, and it just creeps up on you.
Yeah.
So that's a huge one. Very good. Well, we've covered quite a bit here. Before I let you go, I want to ask just a couple of questions to allow the audience to get to know you a little bit better. So the first one for that is, why do you get out of bed in the morning?
That's a good question. Why do I get out of bed in the morning? I get out of the bed in the morning to improve and grow in some way, shape, or form. So my goal every day is to improve something, whether it's grow my business, improve my relationship with my wife, improve my physical fitness or health. I want to at least kick it up a notch in one department at least. So I guess growth would be the reason I get out of bed. It's not always real estate. It's just something. I want to get up and make myself better than I was the day before in some way, shape, or form.
Good. Nice. And then the second question here is, what is a person or event in your history that has been kind of monumental for creating who you are today?
Let's see. Person or event? I don't know about specific event, but I think that just in general, when I was growing up, I was taught very good work ethic in my household by my parents. We never had a ton of money growing up, which, in retrospect was a blessing. And very early on, my allowance as a kid was always, pretty skimpy. There wasn't a lot there, but my parents created this little system where we had various jobs around the house you could do to earn extra money. And this was around probably when I was like 6 or 8 or something. And that created this connection between working to get what you want as opposed to just getting an allowance and saving it up. So I got hooked on working really young. And then as soon as I was able to legally work when I turned 14, I got a job right away and I was actually excited for it. And I've pretty much been like that ever since. So I'd say that the general dynamic of my household growing up taught me really good work ethic. And I think that's played into a lot of why things have gone well for me in that department.
Yeah,
so.
That's interesting. We have 4 young kids, and so we have a little process for certain chores that you could get paid for.
Yeah,
and so trying to teach our kids that you don't just get money for free. Yeah. Money doesn't grow on trees. You have to work for it. So.
Yeah, just don't let them set the prices. Because I remember my mom initially let my sister pick the rates of pay, and she put them up on the fridge. And I can't remember what the numbers were, but they were pretty big. And my mom just was like, "No way, this is ridiculous." So she revamped that a little bit. But I remember, vacuuming the house was like $6 or something. So you do a few things a week, and you could get a pretty decent little income.
Yeah.
So I remember vacuuming was the best. That was the highest one.
Nice. All right. Well, before we let you go, what's the best way for people to get in touch if they'd like to learn more about your business?
Sure. You can cruise by dgkacquisitions.com. There's a contact me button on the webpage. You can shoot me a message there. You can also just shoot me an email directly, dan@dgkacquisitions.com. Or you can find me on Facebook. You can search for Dan Krueger or DGK Acquisitions, and also LinkedIn. Search for Dan Krueger. It should pop up.
Wonderful. All right, Dan. Well, I appreciate you coming in and spending time with us today. Want to give you just a small token of our appreciation, the official Maximizing Your Property Value mug.
I love a good mug.
Are you more likely to put coffee, hot chocolate?
Oh, coffee for sure.
Okay.
I can't remember the last time I had hot chocolate.
Okay.
I like to eat my calories, not drink them. So coffee and then some sort of pile of eggs and pancakes on the side. That's what that's going to get to use for.
Nice. All right. Thanks, Dan, for coming in.
Thanks for having me.
And to our audience, be sure to share this episode out if you found any value in it. Thank you.
Thank you.
The opinions shared on this show are for informational purposes only and should not be taken as a solicitation for representation or investment in any specific offering. Please consult with your financial, legal, tax, and real estate advisor before making any investment decisions. John Stiles is a licensed Minnesota real estate agent with Bridge Realty. Thanks for tuning in to Maximizing Your Property Value, the apartment owner's guide to operating rental properties as a successful business. If you're considering scaling up, downsizing, or right-sizing your real estate investment portfolio, it's important to know how to determine your property's value in today's market. That's why I've put together a free ebook for you called How to Calculate Your Investment Property's Value. To get your copy, go to www.realestatestyles.com/value. Now, if you found any value in today's show, be sure to subscribe to our email newsletter, YouTube channel, and podcast through your favorite podcast player. All the links are in the show notes. And would you do me a big favor? Help me get the word out about this show by sharing with your friends on Facebook and LinkedIn. And lastly, we appreciate your 5-star rating on iTunes. I really appreciate you and wish you the best in your real estate investing career. Signing off, I'm John Stiles with Bridge Realty. Make it a great day.